Almost ready to wrap up the year. Available inventory of homes for sale ticked down again this week. How low will our available supply of homes go? Also, we're getting some fascinating demand signals right now too. So that's what we're going to look at in this week's Altos Research Market Report. Each week, Altos tracks every home for sale in the country, all the pricing, all the supply and demand, the changes in that data, and then we make it available to you before you see it in the traditional channels. It's Monday, December 13th. This is the last non-holiday week of the year, though we actually have 3 more reports to use 2021 data to come. But here's what the market is telling us this week. Active inventory of unsold single-family homes ticked down again this week, just as you'd expect for mid-December. We're down to just 339,000 houses on the market. You can see each year's cycle here. Notice how each year we have smaller available inventory than the year prior. That's because Americans keep turning their houses into investment properties for rent. The only year where we didn't have inventory fall was this at the end of 2018. So if you remember 3 years ago that time, mortgage rates rose for most of 2018. So for sellers at the end of 2018, you could feel lower demand that was a result. And so as a result, available inventory ticked up just a touch. So this is a signal to watch for 2022. If rates rise, don't expect a market crash, but we could expect slightly improved inventory situation. So I think that would be welcome by all participants. Interestingly, as much as I keep expecting rates to rise, they've held steady all year long. So maybe that'll change in 2022. We will just have to keep watching to see if it does. By the way, if you pay close attention to our inventory numbers, you may notice a difference between how Altos Research presents inventory and how other sources, for example, NAR, do. We often get questions about the difference, and it's very useful to understand. So during our webinar this week, one of the places we'll spend time looking is at inventory, how inventory should be measured, how Altos is different from other sources you might hear, and how to communicate about this current inventory crisis with your clients. If you have buyers and sellers who need to understand the market, you should join the webinar this Wednesday, December 15th at 10 a.m. Pacific. There is a link to register for that webinar in the description below. Click that to join us. This will be the last webinar of the year, so you don't want to miss it. Click that link to register and join us Wednesday, December 15th. New listings this week rebounded from the Thanksgiving week, as you'd expect, but demand, as we measure by our immediate sales tracker, is staying elevated. 21,000 houses, single-family homes, this week got listed and then went into contract essentially immediately. You can see the total volume here ticking down, easing down each week from the annual peak, which is June, July each year. Total volume will keep declining until the second week of January, and then it's going to be fascinating to see how Q1 shapes up with this immediate sales metric. What we can see right now is that there has been no easing of demand anywhere in the data. This is one reason that we are projecting another very competitive spring for buyers. Multiple offers, few contingencies. Until we see some of these leading indicators change, that's the behavior we can expect in the market. For those of us who want an at-a-glance measure to understand supply versus demand, answer, like, how's the market? Altos has our Market Action Index. When you look at an Altos report, you can see the MAR for any zip code in the country. This is how we take supply and demand and present it into one stat like a speedometer. When you look at the MAI chart in your Altos report, you can instantly see 2 characteristics. How strong is the market? And is that market changing? This week, the MAI for the whole US is at 58. Any reading above 30 means inventory is sufficiently tight for the current demand levels to be called a seller's market. Anything over 30 is a seller's market. At 58, no surprise, inventory is record low, demand is super high. So we're in a strong seller's market across the country. Local markets may vary, so you can look up the MAI for any local market. But what's interesting here is that the MAI has ticked up from last month, meaning the market seems to actually be heating up before the holidays. Normally, before it does normally in like Q1. So that's kind of wild to see happening. We will spend more time with the market action index in the webinar Wednesday, but here's the MAI over time nationally. So to give you some perspective on how crazy it's been. So you can see how our seasonal peak happened in June this year, as it normally does. It was just way hotter than normal. Then we had our late summer, early fall decline, like normal. And then now you can see the weekly reading. So the light colored line here is the weekly reading. And it's started to climb so that the smoothed one is also starting to heat up, to curve up before the holidays. So this is just one more data point on a market that is really showing no signs of backing down at all yet. Lots more to cover with the MAI in the webinar Wednesday. Register for that with the link in the description below. Finally, this week, let's look at home prices. The median price of a single-family home in the U.S. is unchanged this week at $375,000. Prices have ticked off their peak, as always, have some seasonal patterns, but we're still 10% higher than last year at this time. The median price of the newly listed cohort rebounded this week after the holiday to just under $350,000. So that's the light colored line here. We have one more week before you see the Christmas and New Year's dips. Then in January, this is my favorite metric to watch, the price of the new listings each week. The light colored line here. This is the price of that cohort of properties that hit the market in a given week. So the steepness of this jump in January and February tells us a ton about where home prices are headed for the whole coming year. You can see last spring, this had this big steep jump immediately after New Year's. Anyway, that's coming in a few weeks, and it'll be fun to watch how predictive that is for home price changes for the full year of 2022. You can see so much about next year's market already in the data. None of it is bearish, as far as I can tell. Okay, that's all the data we have time for this week. As I mentioned, registration for this week's webinar is now open. The webinar is Wednesday, December 15th at 10 a.m. Pacific. If you need to know how the market is set up for 2022, if you have clients or dollars at stake, you should join us. Hundreds of your colleagues and competitors will be there. So don't miss it. Click the link in the description below. And of course, to get Altos data, market reports for your local markets, we track every zip code in the country. To get yours, go to altosresearch.com. There's a link below. Run a report, book time with our team. Don't get caught off guard. It's going to be a wild year. Okay, more next week. See you at the webinar on Wednesday.